A very good afternoon to all of you, and welcome to this particular webinar of Decoding the Union Budget to discuss the impact of the budget on the banking, financial services, and the insurance sector, what is being popularly called as the BFSI sector. I welcome you, all of you. I'm Khushru Pantaki, the moderator for this particular session. We have a very esteemed panel for this particular webinar, given the fact that this is basically financial services across the various industry segments in the financial services. We have Mr. Rakesh Shah, the Group CFO of ICICI Bank. We have Mr. Sarosh Amaria, the Managing Director, Tata Capital Financial Services Limited. We have Mr. Sandeep Sikka, the Executive Director and the CEO of Nippon Life India Asset Management. We also have a couple of people on the panel who are representing the professional services world. We have Amit Kedia, Chartered Accountant with specialization in taxation services. And we also have Mr. Vivek Iyer, who is a partner into the risk advisory practice of financial services with Grant Thornton Bharat. As you all are aware, the budget was actually rolled out yesterday. And of course, as usual, it is a good budget. Initially, including me, a lot of people were struggling to understand that what are the good things out of the budget. But when definitely people will go through the fine print and understand the analysis more, it definitely has given a lot of positives. Most important thing I would say is that the budget continues to focus on a very long-term growth and a very stable and a healthier economy. The focus is also on digitalization, the rapid urbanization, which the government has been talking about for a long time. Also rural upliftment in terms of the fact that it is something to do with the agriculture sectors. And of course, continued emphasis on Make in India or Manufacturing India. There is, of course, a little bit of a disappointment insofar as the tax rates are concerned, because the tax rates remained as status quo for most of the taxpayers. And of course, there is a new tax regime on the digital assets, the virtual digital assets, which we will talk about it. And finally, of course, India has really progressed pretty well in the last 7 years, because in the last 7 years, our GDP has multiplied twice. And as a result of which, India now stands on the 5th position as far as the GDP is concerned globally. We are all aware of the dream of our Prime Minister that India should become a 5 trillion economy very, very soon. And I'm very sure and confident that this is one of the sectors which would be a significant driver in taking the Indian economy to the 5th position, to the one of the topmost positions, or maybe to the 3rd position in the near future as well. So with this, I open up the panel discussion. My first question goes to Rakesh. Rakesh, we have heard a lot about the digital currency, which is being rolled out by, which is going to be rolled out by the RBI. Its impact on the financial inclusion definitely would be on the higher side, given the fact that government talks about financial inclusion. The use of cash is reduced considerably after the demonetization, but also it could impact the businesses of the ATM, the cash currencies, etc. And in addition to that, we also have a 30% tax rate on the capital gains arising on account of that transfer. All in all, I think this is a new, it's a very, very new kind of a thing happening in the system. So maybe your thoughts overall in terms of how this particular digital currency is going to be perceived by the industry and by the people at large.
Yeah, thanks, Khushru. So, yes, I think the central bank digital currency, if you look at it today, more than 50 central banks across the globe are at, various stages of preparation. No country has yet launched it, but there are, immense use cases, like you mentioned, replacement of cash, a more efficient, payment system, so all those positives are definitely there. If you would have seen, I think last year RBI had, also talked about it in one of their, speeches, and they kind of, covered the broad spectrum, of, all the issues, that have to be addressed, here. So I think, it is going to take some time. It's not, it will kind of roll off in a pilot phase. I think one has to look at the use case. Is it more on the retail payment side or the wholesale payment side? Technology, background, whether it is a distributed ledger or a centralized, ledger. The one big benefit of cash which people see is the anonymity. You don't know, the cash is owned by whom. So if the CBDC doesn't have that anonymity, will it really replace, cash, or it will just be, an additional, medium? From a banking system perspective, yes, there will be very many, implications. But again, I think the central banks are evaluating how to balance all of it. End of the day, the digital currency will not, carry interest rate. So it's not, going to directly replace the bank deposits, but definitely a part of the bank deposits could get, converted into, digital currency. Then, how does that impact, the deposit flows for banks? How does that impact, the credit, lending that banks do based on the deposits? So I think these are all the factors, which have to be considered. But net, one thing is clear, I think when you talk about a currency, well, while we talk, cryptocurrency and all of that, currency by definition is something which is issued, by a central bank, has the sovereign backing to it. It's a legal tender. So it's a completely different domain, compared to, cryptocurrency, which is more like a, a private, endeavor, and will never have that, same value as the central bank, backed, currency. So that's how, we look at it. I think it is going to be the next step. If you look at UPI, the way it has kind of, completely revolutionized the payments, I think this will be the next step, which will be there. But I think, all central banks will be experimenting with this, going forward. And, we have to see how it, kind of, starts off.
Any comments by any other panelist over here, in case if at all you would wish to add something? This is one of the very big reforms in the budget.
So sure, I think from my side, I completely agree with Rakesh. I think this is a great step, a new step, and if it's happening in the 50 countries across the world, I think it shows India is not far behind. For me personally, I look at this, the launching of digital currency achieves two things. One, I think what the government has given a signal is the legal currency. This is going to be the legal currency, and the cryptos will be an asset class. So I think that speculation that cryptos can be a currency, that chapter is over. That is number one. Number two, I think personally, the way I look at it, when I think the Jan Dhan movement was launched or the demonetization was launched, what did that do? That effectively got more people into the formal economy. And I think with India having about 600 million mobile users, 700 million internet users, and the way things are changing, I think this is going to get more and more people into the formal economy. And one of the things that you started by saying, I think what was missing in this budget was the tax cuts. And this is going to indirectly address that. And why I say this, from a long-term point of view, it's not always going to be about cutting taxes or increasing taxes. It's going to be increasing the user tax base. And this is going to help you achieve that. So I think this is going to be a great step. I think we need to really watch out how things play out. But directionally, it has given two big messages that I think crypto is an asset class, not a currency. Government is going to be launching its own legal tender. And thirdly, and the most importantly, I think this is going to also get more people into the tax base. I think that's the way I see it.
So I would just like to supplement here. Sorry, Kushwa, I would just like to supplement here is that once more clarity emerges on the digital currency, especially the uses, whether it will be more wholesale or retail, eventually it'll reach to a broader user segment. I think that is very key. And on one hand, one point which is important out here, which is the thinking of the government, is that one hand it'll curb the ill of black money. There is a continuous movement of the government. So this will certainly be one more step toward curbing the ill of black money. And on the other hand, it provide an easier way of making household payments, making investments, transfers, etc.
Absolutely. I think and a lot of dust is being settled, because for a very long period of time, people were talking about crypto, whether it will get the recognition of the government, but the way at which the reforms are actually pacing towards making sure that it gets the recognition, I think this is a good step. And definitely over a period of time, we'll see the success of this. Shifting the gears in terms of the policies of the government and the kind of capital expenditure outlay of the government. As you are aware, government has actually planned a significant capex expenditure to spur the growth in the economy. And this particular impact would definitely result into a higher credit growth for the banks, for the NBFCs. A good amount of money will be mopped up by the mutual fund industry as well. So Sarosh, maybe you can start in terms of what has been your views in terms of how it is going to ultimately finally impact the businesses, the industry, and the retail investors as well.
So the biggest positive of I think I read on the budget is the infrastructure is here to power the economic growth. I think there is no two ways about it. The quality of expenditure towards asset creation and the underlying aim of stimulating private investment is really fine-tuned. So I think this is a big plus. I clearly believe that as we move ahead, because of the large capex, the 7.5 lakh crore that what we're looking at, once it's planned and the investment outlay starts, I think first it is going to create a strong growth for jobs. A lot of we've seen the mid markets, the SMEs largely affected, and this give a big boost to see that jobs get created. A lot of in the pandemic, people stock markets have moved out, but there have been a lot of job losses, and we've seen that clearly. So this will be a big step to ensure that government this will drive growth to stimulate the private investment, production, and employment. There is no two ways about it. We will see on the the banking side or the NBFC side, products like business loan, personal loans, asset classes like two-wheelers or cars financing. A lot of growth will happen because once this expenditure starts growing, because it will have a cascading effect down the line. Already we've seen some growth in the last 2 quarters, but clearly once the deployment starts on the large capex of the government, we will see the peripheral areas which are associated with this having large growth. So this is going to be a very important one, and I think it will also work towards financial inclusion. The SMEs will start getting benefited. What we've seen is that the SME sector is still not on its toes right now, and this will be a big step to see that the smaller SMEs start working on this growth part. Thanks, Kushal.
Thank you. Rakesh, your thoughts, because this is basically coming from the government spending, and I'm sure government would definitely need a lot of borrowings on this, which will be financed by the banks, etc. So your thoughts specifically on this?
So I think it's a continuity of from the last year, where the focus was on infrastructure spend by the government and also by the public sector entities. I think it's a continuity. Of course, there has been a sharp growth in the central government capex number for this year's budget. So I think the expectation here is that this will also like Sarosh was mentioning, have a cascading impact, and for a starter, the private sector capex could also follow the spending which happen, and then ultimately the impact on consumption is what the expectation and the hope is. From the banking system side, clearly I think there will be opportunities for credit growth directly with the public sector entities, and over time the private sector capex and some of the consumption linked. So it may not happen in the next 6 months, it may take 12 months, 18 months. But directionally, I think it is very consistent with the overall approach. And of course, the areas which the government talks about, again, there has been a lot of consistency in terms of the capex spend, which is being talked about in terms of building the connectivity, ensuring the financial inclusion kind of remains there. Talking about digitization, so all of those areas, be it telecom or all of those areas. So I think it's to my mind, this was one of the key highlights from the budget in terms of the sharp growth and the consistency in approach.
Thank you. I think we now go to the sector on mutual funds. Of course, as you all are aware, it's a very, very important mode of investment, whether it relates to the corporates or individuals, but very, very popular as far as individuals are concerned. And I got a couple of calls last evening in terms of, what has it been done for the mutual fund industry? What has the government done for the mutual fund industry? Even during the pandemic, the mutual funds continued to grow, despite the fact that everybody expected initially that there will be some problems in the growth of funds, but they have continued to grow. So Sandeep, my question to you would be that what is it that you see in this particular budget where the mutual funds are concerned, and specifically in relation to the retail segment of mutual funds?
Okay, sure. I think from our perspective, you're right. I think the expectation, even I've been getting a lot of calls, and especially typically, I mean, this budget has become more like an event. And so I think run up to the budget, the markets go up, then you saw the volatility that you saw yesterday. And then again, all those calls coming. But many times investors forget, I think what you're doing is you're investing for long term. And today, all of us as portfolio managers also, I think when we read the budget, when we see the budget, I think for us, it is basically the intent rather than the announcement, which is more important, because I think what we are looking at how India will be in next 5 years, 10 years. And as it was mentioned, this budget is going to lay the foundation for the next 25 years, the Amrit Kal, as they say, yeah, that's being built up. I think clearly we remain very, very bullish and positive. I think what it does for the mutual fund industry, I think again, let me go back to what I mentioned earlier. See, I think a lot of infrastructure capex, what is good that's going to do is going to help create more jobs. I think when it creates more jobs, more employment, it's leaving more cash in the hands of investors. And I think we clearly see India, and I'll use the word. I think one of the reasons India has one of the highest household savings in the world is by nature. I think Indians love to save for future. We save for the next generations. And with everything that is happening around in the banking environment, the interest rates, I think you will see a shift of more and more moving into Indian capital markets. And clearly that trend is irreversible. And for me, when I go back to the Jan Dhan moment and the demonetization, in the entire history of the mutual fund industry, those were the two landmark events. They were even bigger than any other event which has been done for the industry itself. So clearly, I think we see this trend is irreversible. More and more household saving will keep coming to capital markets. Our advice to investors will be, please do not see the one day what happens, what is announced. I think even when we as professional portfolio managers, we look at the next 5, 10 years, 20 years, I think we don't look at what happens, what has been announced on that day. And it takes it, and history has it. It takes few years to understand the budget, what was announced few years back, was it right or wrong? Because it is not about an announcement, it is about the execution. And shifting away from, I think the in mutual fund industry, and what we saw, what we really liked in yesterday's budget was a very high focus, not on making announcements, I think, but being conservative and trying to achieve or work on things which are not very good headlines to make. Some of them may be unpopular also, but I think the intent was to increase, the capex, increase jobs, and also the social impact that it created, which I'll touch a little later. So for me, I think the mutual fund industry, this was a very good budget. I think because as long as the country does well, the mutual fund industry does well, the investors do well. That's the way we see it. And needless to say, as investors, as individuals, we'll always be greedy. We always want more tax cuts. And the mutual fund industry will always say, take away the capital gains should go away. The personal tax should come down. That's always, it's good to be wishful. But like any household, the finance minister has to also manage both the debit and the credit side, the asset and the liability side. Everything has to be managed. So I think it is a very good budget. And I think the only advice to the investors will be, don't get carried away. No investment decision should be made based on what you read about the budget or anything that movements that happen in the market for one single day.
Absolutely well said, of course, Sandeep, because I think every year people can't keep on expecting a lot of deductions and a lot of benefits. Otherwise, the revenue mobilization will be very low. Having said this, given the fact that we also anticipate after this particular budget that there could be some levels of inflation, and as a result of which the interest rate of the debt instruments also could go up. Do you see some kind of shift both on the corporate side and on the retail side from the equity schemes into the debt schemes, which means more stability to the capital as well?
So I think clearly there was already an upward bias of interest rate. We were seeing it, and yesterday's announcement accelerated it. We saw 10-year move up by 20 basis points. And I think many times you have to, I think, see, it's good it happened one shot. I mean, rather than, this hanging over for a longer period of time. But I think if you were to see the other way around, I think it's evident from this budget. I think it's all about long-term growth. I think, and there will be there's a lot of stress on fiscal discipline. We can see fiscal deficit move up, and I think also the borrowing was something which the market did not like. But I think, like I said, I think over a period of time, these markets absorb these things as long as the growth and the execution is well. And I think the RBI will be, we are assuming RBI will also be supportive and likely to be broadly accommodative. So let's assume, I think my view is, I think a little bit portfolio shift can happen, but it will not be drastic, because I think only thing that can happen is people moving away from long-term bonds to short-term bonds to avoid any volatility. But I think to maintain the asset allocation, I think you cannot be totally zero in debt. So clearly, but I think I'd like to also add to it, I think normally whatever happens in the bond market, it will also have an impact in the equity markets at some point of time. So I think one needs to be watchful. One should be careful. I mean, the same kind of corporate earnings may or may not be possible. There could be an elevated with the high cost of capital. But like you said, it's a question of, it's very difficult to predict what will happen in the one or two quarters. I think we have to see the India story from long-term point of view.
Sure. Rakesh, Sarosh, anything from your side, given the fact that corporates, and especially Rakesh, in ICSI Group, we have seen that significant thrust on investments by your group companies in mutual funds, etc. Any comments from your side, you, Sarosh?
I think, I think what, Sandeep did not say, I think the mutual fund industry has done a very good job in kind of, making the investors financially literate. I think there's a lot more understanding of the product, which is there, which cannot be said of so many other financial products. So I think the SIP and the increase in that and the consistency in that is an indicator of that. So we are, in general, very optimistic, about this. And in the long run, like Sandeep mentioned, it's not about a day here or a month there or here, but from a longer term perspective, we continue to be very optimistic. Of course, from a bond market perspective, clearly, if you look at the numbers, I think on the revenue side, government has been pretty reasonable. I don't think those are, in any which way, any kind of optimistic estimates which have been built in terms of, estimating out the borrowings also. I think, it is pretty much the higher end of, what they would end up, doing. So clearly, the level of borrowing is much higher than last year, and that immediate reaction, came in, in the bond market. But again, like Sandeep said, if you take a step back, I think the entire market or the economists were expecting or are expecting, 75, 100, 125 basis point kind of increase in repo rate by RBI over the next 12 months, 15 months. So I don't think anything changes in that. It is just a bit of an acceleration, which has happened, and sometimes it is good. And I think there will be enough, ability that the government and the RBI, will have in terms of, managing, through this, borrowing program. I think one of the things which people were expecting or whatever, maybe hoping, was around, the bond inclusion, the index inclusion, and, some of the taxation related aspects on the Euroclear, which did not come in. So I think that there is some, reaction which has come in because of, that as well. So I think it is largely factored in. I think from a 6-month, 12-month perspective, to my mind, this does not change, things too much. And as, I think if the execution by the government is, in lines with what they have talked about, and the spending is more on capex and infra and all these other areas, I think it is worth the higher borrowing which we are seeing.
Absolutely, and no wonder that the markets were very positive yesterday, and I think one expects a sustainable growth in this industry as well. Sarosh, anything from your side?
We clearly, so as discussed, we are seeing acceleration of interest rates going up. The input cost for banks and BFCs will go up, and this will need to be passed on to the end customer, be it on the corporate side or the retail side. So clearly see some increase in rates to the end customer. But the bigger concern is, how will the inflation, pan up in the next few months? I think if that accelerates more, then there could be a reason for higher rates in the market. It also depends on how the Fed increases the rates. They've been giving enough hints now for the last couple of months on the rate rises. So if that happens, this will put some pressure on the end customer, be it the retail or the corporate, where it won't reach the levels what we've seen earlier. But there will be, 2020 and 21, you've seen, a steep fall in rates for the end consumer. Home loans have been at the lowest at 6.75, 6.70. Possibly there may be some pushback on rates. The end consumer, the corporate or the retail may have to start looking at slightly higher.
Thank you, gentlemen, for your inputs. Just moving on further, I think one most important development in this particular budget is also on the GIFT City, the IFSC GIFT City, which is based out of Gandhinagar in Ahmedabad. And there are quite a few things which are there in the fine print of the budget. So maybe my question to my friend Amit Kedia, maybe a little bit of understanding that you can provide in terms of where the opportunities are, where the uniqueness is on the GIFT City, and how do you expect this particular growth happening? Because we've been talking for a long time, but it's comparatively slower than what other institutional GIFT cities are there, similar kind of institutions are there internationally also. So maybe your perspective, Amit, on this.
Yeah, thanks, Khushru. Yeah, so I think you rightly said that I think the IFSC GIFT City as a concept, it took a little bit of a time to be understood by all of us and to take off. But clearly, in the last 5 years, I would say that things have dramatically changed. I think in all the conversation that we have as tax consultants, I think on a daily basis, we get inquiries about IFSC GIFT City, where people, businesses, investors, fund managers, including, all want to understand about IFSC GIFT City, what it is all about, how is it different from what we do generally on a day-to-day basis, or been doing for last many years. How is GIFT City as a concept different from onshore India? And clearly, people are amazed with the regulatory flexibility, with the tax exemption incentives and policy changes, and the approach of the regulator, which is IFSCA, towards attracting businesses. Clearly, it's one of its kind, and maybe some perspective about what's happening in IFSC GIFT City. So first of all, as you rightly mentioned, Khushru, that it's an international financial service center, much like what we have in Dubai, Singapore, US, Luxembourg, Ireland, etc. India has got its first IFSC in near Ahmedabad. It is aimed to attract Indian and global players, financial institution, and fund managers to onshore a lot of activities which till now were offshore in some of these sophisticated jurisdiction. Clearly, as I mentioned, in the last 5 years, but things have changed, especially when the IFSCA as a unified regulator was set up and appointed a year back plus. I think things have really fastened the pace. So what we see today is that there are almost 20 banks, domestic and foreign banks including, who have set up shop in GIFT City in last 5 years, and they manage almost $100 billion of book from there. In terms of fund management activity, in last 2 years, we've seen almost 15 to 20 AIFs approach the IFSCA and taken registration to set up their fund, in IFSC GIFT City. And what we understand is the total commitment, or the AUM, is more than $10 billion already being managed from there. So we see a lot of global and domestic names there. There is a lot of new products which are being already there in the GIFT City, which includes lot of commodity, currency, derivative products. SGX Nifty is going to start trading from GIFT City pretty soon. So it will have a lot of these international products being there. Bullion stock exchange is going to be set up in next couple of months. That will take it will have a lot of attention from banks and other financial intermediaries. And there is fintech hub which is being set up there. Again, a lot of startups and fintech will get attracted to GIFT City. So all in all, there is a lot of opportunities for Indian as well as global players. It will have the best of all products what we see in various parts of the world, and with the operational cost being what it is, fractional of what it is internationally, a lot of tax benefit. You're one of the best regulators, I would say, in India. I think it is the best possible combination for what a business could see and have, and I think it's got a great future ahead.
No, absolutely. I think I mean, our interactions with the regulators also have been very good, very welcoming, very understanding. So maybe Rakesh, a couple of thoughts from your side, given that, how the banks are actually trying to mobilize and enhance their activities in the GIFT City in general.
Yeah, so I think, Amit covered that. I think over the last few years, we have, most of the banks have set up their shop. And, one is able to see that, a lot of the business that we were doing from, overseas jurisdictions, we are pretty much, able to do it with the same kind of benefit, from the, GIFT City. So I think we expect, these things to, definitely scale up. Of course, it is never at the speed at which we would expect or hope. So I think it is going to take time. And again, there has been a consistency in approach of the government, which has been there for the last several years. And this time also in the budget, I think some of the things that they have talked about is clearly long term, like setting up foreign universities and institutions, with courses in all of the sciences and fintech and all of that. It's not going to happen overnight, but from a long term perspective, definitely it's the right direction. If you look at they talked about the international arbitration, center, as well. So there are, things that they have, talked about, and of course, I think the sustainable and climate friendly, financing, which can be, enabled, through IFSC is the other area which is there. So again, how all of this gets executed, we have to see. But the nuts and bolts are definitely being, built up. The regulatory authority which has been there, I think, they have been working over time, from, our understanding also based on our interactions with them over the last, 12, 18 months.
Sure. Thank you, Rakesh. So I think, yes, everybody is pretty optimistic about it. I think the proof of the pudding is in eating. So maybe we will see over the next couple of years as to the ramp up of these activities at the GIFT City. My next question is to Vivek. Vivek, yes, we've been hearing a lot about green energy, clean energy, and the government emphasis on the green bonds, which basically would be issued by the government for the purposes of mobilizing funds for the green infrastructure. Now, this is definitely an initiative of the government. But do you believe as a professional that the same could become a source of the raising funds where the private sector is concerned or non-public sector is concerned?
Oh, definitely, in terms of from that perspective, definitely, I think that that's a great source of funding that will come in. Primarily, not because it's a green bond specifically for a green infrastructure, but it's because of the fact that the kind of tenor that you would potentially need to look at for such bonds, that tenor is not really the most traded and available tenor in the country. You would actually need a separate kind of a fixed income product for the purpose of actually raising those kind of funds. And as a result of that, honestly, in terms of, while green infrastructure is one of the suggestions, the thought process that we don't have that tenor of borrowing in the country has been a challenge. So as I was saying that, given that the long tenor of funding is something that the green bonds will offer, it's a viable option from that standpoint that a lot of organizations will explore. A lot of organizations literally in India have been exploring impact bonds for some time. So I believe that green bonds may potentially also kind of serve as a template for that. So a lot of opportunity, at least from that standpoint.
Surely.
Yeah. So yeah, what I see what I believe out here, Khushru, is that the value of green bonds issued in India constitute a very small portion of the total bond issuance. Though India started, I think, in 2015-16 green bonds, lending institutions, PSUs, even municipalities, private sector have raised green bonds over the past 20 years. But we significantly lag behind China on this. The impetus is much higher. What I believe is that providing some tax ops to corporate green bonds, could be evaluated to spur up investor demand.
That's a good input, and I think that message one should be able to give it to the ministry as well. That and I've heard this otherwise as well, that a lot of tax ops are expected on this, given the fact that this not only results into the expectations and the objectives of the government to have cleaner environment, greener environment, but also would be in a position to sort of promote a very different source of energy, which is going to be the one which is going to be sort of lasting for over a period of time, and at the same time it's going to be sustainable over a period of time as well. So I completely agree with you on this. Just shifting our gears in terms of the MSME, the kind of reforms that one expects on the MSME front. And Saroj, that is my question to you, that the government has spoken about MSMEs in terms of some of the policy announcements, etc., which could lead to the higher growth in the economy and generate more employment opportunities as well. So initially, maybe your thoughts would be helpful over here.
Yeah, so this is one sector or one topic very close to my heart out here. This sector is the is the engine for growth in India. We can see clearly the large corporates doing extremely well over the last couple of years in spite of the pandemic, but the MSME sector has got really impacted, and we've seen that in the results of the banks and NBFCs out here. So the first move by the government out here in the budget, where the emergency credit line guarantee scheme, which they call as the Ecgls scheme, which has helped the MSMEs to come out of the pandemic, is extended till March 23. So they have extended it by a year, and the guarantee cover will now be increased by 50,000 crores to 5 lakh crores. Though that 50,000 crores is going to be in the hospitality or allied sectors only, but the sheer extension of this scheme will enable and give strength to the banks, NBFCs, to lend more in this area. Have the courage to lend into these areas, to see that, ensure that lending comes more, and banks open up their lending into this area. So I think this is a very, very welcome move for one more year. The guarantee scheme extended, I think it's a very good move, and this will help up lending to this sector. The other one, which is also a very popular scheme, where up to 2 crores you lend to the credit guarantee, the CGTMSE scheme for small for small enterprises, is completely going to be evaluated and revamped, as what we hear out at this, and a credit of 2 lakh crores to micro and small enterprises. This will expand employment opportunities in this area. So we need to see the fine print on how this CGTMSE is rolled out. One more, there is a extension of 1 more year for concessional tax rates for 15% for domestic manufacturing companies commencing till 2024. That is another welcome step. So I think all these will help the MSME sector. The lending institutions, banks, NBFCs will come much closer to lend into this sector, which is actually the heart of India's growth engine for the next few years. Because we have more than 70 million NBFCs in this country, and I think that is what will spur up the growth as well. Thanks, Kushru.
No, absolutely. I think Rakesh, your thoughts.
No, I was just saying that, just to, reiterate what Saroj mentioned, I think the Ecgls scheme, if you look at it, amongst the various steps, that the government or RBI have taken, since the onset of pandemic, this was one, which was pretty simple in execution and was extremely scalable, so if you look at, many other things really did not pick up as much, but the pickup on this, just because of the ease of, execution and implementation, and the kind of support it has given to entities, where the business models are there, but because of the pandemic the impact was there. So of course, where the business model is broken, you can't support it through the scheme. But in banking, NBFC portfolios, we have seen a number of companies which require that interim support, because of all the impact of the lockdowns and all of that. And given the criticality of this this segment, various ways you look at it, it contributes, maybe 30% of the GDP, if not, higher. So we believe, it is definitely a very, positive, step, and something which will be, taken up and get utilized, and will clearly see an, outcome, positive outcome of this, going forward.
No, absolutely. Given the fact that government has been talking about it for a very, very long time, we have seen the enhanced disbursements of funds to the MSME by both banking as well as the NBFCs. And I think the experience also of the banks and the NBFCs on the MSME side has been good, despite the fact that, of course, we had a couple of years of COVID environment. But I think that definitely will impose more confidence into the MSME sector, which ultimately rolls out new entrepreneurs who will be the future large entrepreneurs of the country. So absolutely, coming from that perspective, it is definitely more welcoming. Amit, my next question to you would be in terms of your initial assessment or thoughts of taxation of cryptos, etc. I mean, there is a lot of talk about that. I mean, we could hear it on the channels also yesterday. Any specific thought you have on how it's going to be taxed and what should be, what should not be? We are talking about specific things like, any gains arising may not be allowed to be set off against brought forward losses, or underlying expenses may not be allowed to be claimed. It is a strict regime. Why is it that it's very strict, and what is your thought on that?
Yeah, so I think first is one is to look at it whether this is little good news or bad news. Obviously, I'll start with the good news that at least there is acceptance somewhere or mention of cryptocurrency now, or virtual digital asset in the Income Tax Act. I think this is somewhere and gives a little bit of a certainty of this probably would be accepted for at least till the time you have the crypto bill passed as legislated. At least there is some clarity, certainty for taxation rules. Now coming to the flip side, is clearly the tax rate of 30% on income arising on transfer of virtual digital asset, which includes cryptos, NFTs, etc. I think the tax rate seems to be on a higher side, which was a little unanticipated. I think the message seems to be that any investment or trading in cryptos seems to be on much similar to speculative activity, because the income tax rules have similar rules for generic speculative activity, and it's kind of given the same or similar treatment from tax law perspective. You rightly mentioned, Khushru, about deductions and losses. So what is proposed in the budget is that only the cost of acquisition of these, say, cryptos, etc., would be or could be taken as a deduction from the sale consideration. Any other expense would be disallowed for deduction. Then, in terms of brought forward and carry forward of losses, this cannot be the loss, if any, from trading of cryptos would not be eligible for any set off against any other income. So, given the recent volatility in cryptos, there would be people who may be having those losses, and hence, they could get stuck and they may not be able to utilize those losses, real losses, against any other income. In fact, the bill also says that if there is a gift of such assets to your relative, etc., again, that would be considered to be a taxable transfer, and hence taxable by the hands of the recipient of such asset. One more thing which the budget mentions is the withholding tax provisions, which says that 1% TDS would be required to be done at the time of transfer of such asset and any payments being made to the seller. And hence, again, that will create audit trail for the government, tax authorities, and clearly it will get reflected in probably your 26 years, etc., as well. So, to an extent, it's that way. It is little bad news for all the crypto investors or traders. But equally, I would say maybe it's a little bit of good news that maybe if people consider it to be more of speculative in nature, a lot of money which were parked in there probably will get diverted to equity market, mutual funds, etc., and maybe hence may be helpful to other segments of the economy.
Surely. Let me sort of take this particular discussion further with Vivek. Vivek, since you've heard Amit more from a taxation standpoint, where crypto is concerned, what are your views in terms of digital assets, the virtual digital assets, the crypto, in terms of ease of doing business, in terms of creating more awareness, and how the industry and the individuals, etc., are going to be indulging in these kind of activities, because the level of awareness is currently not the best. And how do you think that the government would support creating more awareness and making it more successful?
I think that personally, in terms of the RBI announcing that they will go with the central bank digital currency, exclusively meant that the cryptocurrencies won't be treated as as currencies, but they will actually be treated as an asset class, which is good in a way, because once there is a there is a form of certainty, as Amit also spoke about, that it's a digital asset, then at least the next steps. I mean, the way I see it is, yes, there is going to be, since it's a digital asset, and since there is a lot of trading and activities that will be actually happening in this space, there is a possibility that, AIFs, with respect to these funds, quite a lot in the gift city, some of them may explore it in the domestic tariff area as well. And in these locations, we actually kind of see a lot more on the domestic side, at least. I see potentially a lot of suitability, appropriateness requirements, conduct risk, from a conduct risk standpoint, essentially to come in. Because I mean, a very simple instance would be, when perpetual bonds, additional tier 1 bonds, people didn't kind of understand what it exactly meant. SEBI came out with a requirement on who can invest in perpetual bonds. I think, depending on, it's definitely a digital asset. So technically, I am expecting SEBI to kind of come in to regulate this. And when they actually come in, potentially expect suitability, appropriateness requirements in terms of who are the kind of investors who can actually invest in this place. Potentially, how could AIS look at this as an asset class? So those pieces, at least I think, are expected regulations. While the entire theme of the budget has been light touch regulation, I don't think crypto will be a space that will kind of, be benefited with that immediately. There'll be some amount of detailed oversight. And as the understanding improves, both of the regulator as well as of the market, I believe that the regulations will start getting, like at least the next 4 to 5 years, we expect a fair bit of regulation on that space. And once the understanding kind of gets better, we will see kind of relaxations there. And at least
absolutely, because please,
No, that's a sense. Yeah.
No, because I also heard that some people were mentioning that even without rolling out a cryptocurrency bill in terms of specific regulations, etc., I think the government has introduced this in the budget. But you are right, absolutely, that it will take a little more time till such time that it gets completely matured and acceptable in the marketplace. Thanks. Anybody else maybe wanting to comment on crypto or digital asset on this? Okay, we go to the next then. Sandeep, my next question is to you. Again, more from a financial inclusion standpoint, that the government has mentioned that post offices would now become a major source of mobilization of funds where financial inclusion is concerned. And of course, they have also mentioned, the budget also mentioned that 75,000 digital banking centers, etc., would be opened up in maybe more than 75 cities, which is again a great thing from a financial inclusion standpoint. This will enable a lot of people in the rural areas to save their money in bits and pieces, or maybe enhance the saving potential out there. And then, of course, they will be channelized into various investments. Very honestly, do you see this as a major threat to the mobilization of funds in the mutual fund industry?
No, I will not. I think I see it as an opportunity. I think what we have to see all these things, any investor coming to where the financial savings are getting in a formal structure, or is coming to the capital market, is only helping in deepening the capital markets in India. The way you have to see is, I think today, post office, the kind of reach they have, I think many of us may not be aware of the fact that I think with all the financial products which they have, even today, they manage a money of about 40 crore people in India, which may be bigger than any mutual fund, any insurance company, and many of the banks. So I think it's clearly all these things. I think many times it is not just A versus B, it is complementing each other. And I've seen this, in I think as Nippon Life, because our headquarters are in Japan, I think what Japan Post has done for the financial inclusion in that country. So clearly, we see it not as a threat at all. I think any step of the government which helps in getting household savings into the formal structure is a very, very good thing. And I think I can tell you, many of us staying in big cities may not be able to appreciate the fact, but the kind of reach, respect, and trust the post offices have in villages is difficult to believe sitting in Nariman Point or BKC. So I think the point I'm trying to make is it's a very different ballgame, but ultimately everything lies, the key lies in execution. It's a great step. Now there can be a lot of, there has been a counter to this also. What's so great? You already have the banks in India. Banks are also doing the same thing. But again, like I said, policy announcement is one part, execution is something different. And we need to wait and watch, but I think it's clearly a step in the right direction.
Absolutely. Rakesh, just extending this question to you further, that given 75,000 digital banking centers across the country, sort of, the prerogative of the private banking, how do you see from an operational nut and bolt perspective this to be implemented over the next few years?
So if, like Sandeep was saying, I think on the, the post offices, for example, the fact that, it will be coming onto the core banking system, what it kind of ensures is that there is, interoperability which kind of comes in. Otherwise, that money was today, lying in one complete, isolation. And that is one important factor in financial inclusion, we have seen, all this while. So again, it is a further step in that direction, the entire, access to mobile, the Jan Dhan accounts, the Aadhaar, I think it's a further step in that direction. Of course, right now, there are not too much of details available on the digital banking units, which has been talked about, I think about, 75 of them to be set up in the key districts. So, but again, the directionally, it is again, providing access to the people who may today be outside, of the banking, system, and maybe a part of the informal system, and giving them access, through this, because, things are rapidly evolving. If you look at, the way UPI has come in, or, maybe, 2, 3 years, 4 years down the line, the central bank digital currency we talk about. So it is very important to keep on expanding, at the margin. And we have seen, from banking system perspective, from the perspective of, this set of, individuals and customers, that it is a, huge, positive. Again, none of this, Khushru, we have seen, happening in a hurry. I think, it will take time, but as long as the direction is right, over time, you will have, this set of people, being financially included, be it from a banking perspective, from access to NBFCs or mutual funds or insurance, all of that, kind of, comes in. So the post offices, the core banking thing, I think we have to see how that gets executed, but that will have, huge implications. I think Sandeep talked about the kind of savings that people have, at the post offices.
Absolutely, and the consequential impact would be definitely on less and less printing of money going further in the future, given the fact that digital currency is going to be the new norm. Just coming to the last.
Sorry, Kusha, I just like to add one more point out here, if with your permission. Yeah. Sure. So, this the entire penetration for the financial inclusion. There is a large sector of microfinance, which is more than 2.5 lakh crores today, out of which the rural area would be 1,75,000 crores to almost 2 lakh crores. Yes. And this opens up a large opportunity for MFI sector. Today, 100% of the practically 100% of the collection in this sector happens through cash, in the rural areas. And when 100% of the post offices come under core banking and enable online transfers of funds between post offices and bank accounts, this will enable a huge opportunity for for online payments in this area in the rural sector. It will open up transfer of, and financial inclusion can be really high, where 90% is cash right now when the collection method can, when the post office start accepting and doing online transfers to their bank accounts, thereby which banks can collect the money in the MFI sector. This will create a large impetus in this sector, and the sector is now very well regulated by RBI. It has been growing steadily over the past 10 years. So I think this step of inclusion of post offices will is going to help the MFI.
No, absolutely. I think, and the entire thrust on digitalization, digital money, secured ways of payment, ease in operating, etc., they all go together in creating a very different digital economy and a digital currency as well. So it's very well taken, and I'm sure the thrust of the future budgets also is going to be on this concept. Maybe one last round for everyone over here, starting with Rakesh. Rakesh, as I'm sure the banking sector would have had some expectations which unfortunately could have not been met in the budget, or maybe would be met in the future. Any specific one or two misses where the banking sector is concerned?
I don't know about from a banking sector point of view, Kushru, it's always about, as long as, the initiatives are in the right direction from long-term, economic growth, point of view, at the end of the day, banks are just a proxy. The opportunity for banks is just a proxy to the economic growth. So to that extent, nothing specific, for banks, that, one was, looking at. I talked about, one of the factors, I think, on the, the government borrowing program. I think there was, decent amount of hope that there would be some clarification around the taxation, on Euroclear, and some, talk around the global, bond index inclusion, which may have helped, the spirits a bit, in the market. So I think maybe, hopefully, it was not a budget item in terms of bond index inclusion. It kind of comes in, 3 months, 6 months later. So I think that was that. Otherwise there was nothing specific, from a banking point of view, that we were expecting. I think on the macro we discussed, all the positives, which were there.
That's right. Yeah. Sandeep, your perspectives on the business. Anything?
I think from the mutual fund industry point of view, we didn't have too much ask. I think it was just the ease of doing business. You can say from investor point of view that there should be parity between ULIP and mutual fund, tax parity between ULIPs and mutual fund products. And the other one was also harmonizing the holding period capital gains for both debt and equity, because ultimately both are asset classes. But again, like I said, this was not a very big ask. I think whether it happens now or later, I think the industry will do well, India will do well. I think, and that's not something that we regret did not come, but we will definitely go back to ministry again with the same request next year.
Absolutely, of course. Sarosh, where NBFCs are concerned?
See, I would like to give a little populist answer out here. After the pandemic, the honest middle class taxpayer was expecting some relief in taxes. So that the only measure is in this budget is the updated tax return provision within 2 years after the end of the assessment.
Yeah.
That is not going to impact the masses, but I think that is from a honest middle class taxpayer, I think that's something which there is hope to ask again in the next budget.
Absolutely. Vivek, your perspective?
Actually, in terms of 2 points, really, I was very hopeful and looking forward for that. That didn't happen, but I do understand that in the priority order they might not have been. One was the rationalization of foreign bank tax rates. That was something really looking for, because the difference is substantial, and especially at a point in time when investor optimism, ease of doing business, and green energy and all of this is very important, and they serve as good conduits to foreign exchange. I was expecting a rationalization there because the difference is significant. That was one. Secondly, on data privacy, the budget kind of really positioning that it's a priority, and then we'll kind of do it, because I saw various aspects around it that were mentioned. So, I saw somewhere written in the budget that there is going to be a consent framework in place for the purpose of creating a registry of documentation. The consent framework, depends on the data privacy law. And, we spoke about virtual digital assets. We spoke about a lot of digital push. The consent layer is the most important layer, and the data, and the Data Privacy Act kind of puts, the owner of the data as the end customer. So with that, I believe that clarity in the budget. I'm not saying that you can guarantee in terms of when the bill becomes a law, but in terms of just a push in that direction, and nudge that this is a focus would have helped. These were the 2 points, at least from my perspective, I was looking for, but I didn't see it.
Absolutely. Namit, I think you being a tax guy, I'm sure you will be having a couple of points also, knowing the pulse of what was expected. So over to you.
Yeah, Kushru. So we represent the all industries. Financial service industry has got so many subsectors, and we being representative of these industry for our clients, we had a very, very long list, like every year, more than 50 pointers as a wish list, which we filed with the government somewhere in September, October pre-budget exercise. So clearly out of that, some of them got addressed, related to IFSC, GIFT City, or cryptos, or level playing field for mutual fund industry. I think some of those things have come out, but clearly a lot of things obviously have not come out, which is the case. More we get, more greedier we get. So, but I would say that there was no big bang announcement, and equally from personal tax point of view, some relief would have been helpful to spur growth and demand and consumption in the economy. But overall, I think it was a good.
Absolutely. I think having spoken to a few people, especially individuals, a couple of things which were expected and which were real very high expectations, which is very difficult to meet up, is that the standard deduction should have been doubled. That was somebody mentioning about it, which I found a little more difficult for the government to do that. And of course, the deduction under HIC to be also doubled, given the fact that it would have created more investment opportunities for the individuals. They would have made investments at a higher level. And of course, that would have mobilized funds for the government. But I would definitely be optimistic to some extent where the next two budgets are concerned, given the fact that those would be very, very close to the central elections happening in 2024. And I'm sure that those could be expected to some extent in some form or the other, where the next two budgets are concerned. But I think the learnings from this particular webinar has been that it is a good budget, which I also agree, having analyzed it now. It is something to develop infrastructure, agri-industries, and to a great extent promoting digitalization, rapid urbanization, bringing in more financial inclusion. And these are the real long-term agenda, because it cannot be popular every year in terms of giving tax off, in terms of giving incentives. It has to be sustainable. It has to be in a proper phase manner. And I think that this could only lead for a better growth and for India to be ranked as maybe the third largest developed nation in the next few years or so. We're already on the 5th position. And I think this has been a great job by the government as well. So let's hope and let's remain optimistic for the future as well. I believe we do not have any time for the Q&A, given the fact that we have already surpassed 1 p.m. So let me take the opportunity of thanking all of you, Rakesh, Sandeep, Sarosh, Amit, and Vivek, for being here this afternoon, sharing your very candid perspectives about the impact of the budget on the financial services sector.